There's something that occurred in the S&P chart that hasn't occurred since basically this wedge pattern on my chart began back in March 2020. And the last time I was on, which was I think about 3 weeks ago with you, we talked about how this is what I was looking for. And again, here's the wedge pattern. You can see it goes from the low in March 2020, and you can connect these highs. And look at how the wedge pattern was closing, getting smaller and smaller. And when a wedge pattern gets smaller and smaller, what it tells you is that it's inevitable that price will have to break out of that wedge pattern. And it also signals that when it breaks, it's likely going to be a bigger move. Now, in the last 2 days, something occurred called confirmation. And what confirmation is where you get a close below the wedge pattern trend line right here. You can see it happen right here on, I believe that was Tuesday. And then the next day, you closed below the low of that low on Tuesday. So Wednesday's close lower than the Tuesday low. To me, that confirms the potential breakdown, and we should see further downside to go. Now, what's amazing about this chart is that we had a close below here where the market makers and the algos teased us, but look at how price went right back into that wedge pattern. Then same thing over here, a big gap down, and then they rallied it right back in. So there was no confirmation on either of these two breaks of the trend line, and the confirmation has officially occurred here. So this is the first time where we have a confirmed breakdown of the wedge pattern, and it has the possibility to lead us to further downside.
I was going to ask you if that means further downside or a bounce back, because usually it could go either way, right? It could mean an oversold position where a bounce back is inevitable.
Yeah, so what it really tells me is that there's finally a situation where the algos are not going to come out and save the day, or at least the probabilities. And right, and remember, everything I talk about is all probabilities. All right, so it's the odds of something happening versus not happening. And when you confirm a break of a trend line, it signals that the probabilities shift to further downside versus the market getting saved to the upside. So in all fairness, you could even see it today, right? So the market's open lower today. They've gone positive, but they're struggling to hold on to those gains today, and I'll be very interested to see at the end of the day, are they unable to? And that could also be viewed as a change in character, where we've been so consistently used to this buy the dip mentality, where you get this small correction and they rally the market back up. And watch to see where this S&P closes. Right now, the spider's only up 15 cents on the day and giving back some of their gains. And the markets are amazing in the fact that they can discount something and kind of ignore something or multiple things until they don't. And the problem is it's like the theory of what straw breaks the camel's back, right? I mean, you could put a lot of things on the back of this market. As long as the small investor is willing to pile in more and more money, the markets can inevitably grind higher. The problem I've been seeing lately is if you look at an intraday chart, and I'm not going to bring it up here because it'll take me too long, but over the last month, the markets have been opening, and then in the first hour, you get a sell-off, right? And then the markets kind of go to sleep and they float back up. And that sell-off in the first portion of the day is institutional selling. Now, you might say, well, how do you know that? Well, basically, you can tell by the volume, right? The period of the day where there's enough volume for institutions to sell is really only the morning period, the first hour of the day. And it consistently, we were seeing probably 4 days out of 5 days, an open, a sell-off, and a float back. And that float back is small investors buying the market back up. The problem is small investors are running out of investable money. And we're seeing that in the numbers here where they're getting a little bit more cautious. The Delta variant is here. They're starting to use up all their investing income, or at least a good chunk. And that creates a problem for the markets to continue to go higher. Anytime a market is in the throes of topping, right? So a market just doesn't go down vertically to the downside and collapse, especially coming off of highs. The biggest drops occur at the end of bear markets. And the reason is, so if you look at this market, right, there's this ingrained mentality of buy the dip. In fact, we've had multiple 3% corrections on the S&P over the last 6 months, 8 months, 10 months, and then people are just conditioned to come in and buy. So what you're looking at here now that we've confirmed below the wedge pattern is you should expect buy the dip, but what shouldn't happen is the highs shouldn't be taken out. And essentially, you're going to get more sellers than buyers that are buying the dip, and you'll get bounces, but you're not going to take out and make new highs. So this is I'm putting myself on the spot here saying that at this point going forward, and we should reconvene in 2 weeks, let's see if the S&P has made higher highs, or if I'm right that you've now confirmed below this. And yes, you'll get bounces, but you're going to ultimately go to lower lows now. So one of the things I've talked about is that Bitcoin will eventually get to the 18 to 20,000 marker. There's really no question in my mind. In the short term, what you're probably going to do is go test this head and shoulders neckline. It's what we call a retrace to the scene of the crime. So I still think you have upside to about 50 to 52,000. Now you might say, wow, that's such a big move up. Why would it then go down to 20,000 or 18,000? I want to show you these charts because this is going back to the previous big moves in Bitcoin and what happened after. So what I'm going to do here is bring up this chart of Bitcoin. This is the big move it had in 2013, where it basically went from $100 to $1,300. What you then saw was a correction to 450, a then snap back to 1,100, and then a move down to 100. All right, so you may say, okay, why does that have to replicate here? It's just one thing. Well, take a look at the 2017 move in Bitcoin. So here you have it. It goes up to 20,000. It corrects to 11,000. It then bounces all the way back to 17,000 and then goes basically to 5,000 or just under 5,000. So now what you say is, okay, well, here Bitcoin was at 65,000. It corrected to 30. Could it go back to 50 to 52 and then go lower? So I think you see what I'm saying here, David, which is that this is actually following an exact replica of the previous two mega moves from 2013 and 2017. And there's really nothing that's telling me yet this is any different. So everyone is saying, oh, it's different this time. Everyone always says that. For me to believe it, it has to prove it to me. The way it would prove it to me would be if it takes out 65,000, then you can say, okay, now it's different on the chart from 2013 and 2017.
Was the volatility profile of 2013 the same as the one in 2017? In other words, did both instances move as much in percentage terms?
So the percentages are very, very close, right? So in 2013, the drop was even more dramatic before it snapped back. But what's amazing is that both snapbacks have been so dramatic. Look at, you basically came within $200 or less than 20% of that high. And if you go to the same one in 2017, you can see here, you came within 3,000 of the 20,000 before the collapse back down. So
right.
Going back to 50,000 to 52.5 could actually be an understatement of where Bitcoin could go before it falls back down.
That was my question, yeah, because if you look at those two charts that you're showing right now, the collapse was in the order of 80 to 90%, whereas right now you're suggesting from the highs, $60,000 to $20,000 is 66% drop, right?
Yep.
So it's nowhere close to what happened before.
It's not in terms of percentages. You're right. My target should probably be higher. I'm just following the resistance line of the inverse the head and shoulder pattern as a retrace to resistance. But you're 100% right that both on the downside and the upside, it could be even more accelerated.